welcome to our real estate panel debate. Today we are hosting this event together with Daan, a collaboration, Daan Welvaart.
Otherwise, yeah.
He is a real estate specialist based in Dubai and one of our ABC members. We hosted a couple of events together already, but he will take over today for me and moderate this event. And please, we want to keep this interactive. So if you have questions, please raise your hand and we will include you all in this debate. So I will hand over the stage to you.
Thank you guys. Welcome everyone. I think I spoke almost to everyone. So wherever I haven't had the chance to properly introduce myself, my name is Daan Welvaart. I'm a real estate agent. Mostly help Dutch people invest in Dubai, but also a lot of local investors advising on staying ahead of the market. So before we start, I just want to have a quick brief about today's concept, because for the people that are used to NBC events, it's a bit different than we normally do, because we have created a kind of panel where we're going to show you all perspectives of the market. So we have an investor, mortgage advisor and a developer, and obviously me as the moderator as an agent perspective. But most importantly, we have you guys today, the audience, the end users, the tenants, the buyers, the sellers. So it's very important if you have a question, just raise your hand. If you want to give your own opinion about the topic, just try to stay involved. All right? So before I'm going to introduce the panelists, it's good to have a look at the numbers of last year so that we're all on the same page. Because last year was another record year. I mean, the amount of transactions, another record. The value of the transactions, another record. Mortgages, never been so many as last year. But for the people that do know me, you know I love to look at data. I mean, data is where you can spot trends and try to be ahead of the market. And if you look at the data behind me, it seems that a lot of people have cash nowadays because 80% of them are buying without a mortgage, right? Seems to be a good positive sign. Then if you look at the other charts, you see that around 62% of all transactions taking place are off-plan transactions, so are mostly bought through payment plans. So it's very important that this end user segment is trying to catch up, is stable enough to afford this amount of supply coming to the market. And we know that the real estate market is depending on a lot of factors. I think we all agree that the most important one is population growth. And luckily we have seen that increasing as well significantly last year, the year before, and it's not looking to slow down anytime soon because we're already at 4.1, I think, by now. So I think for me personally, 2025 was a year of marketing, and obviously I'm in the real estate, so I see it happening around me. I've stopped counting the billboards alongside the 6 Road with real estate promotions, but a few of them were really showing the trend of the market. For example, this first time home buyer initiative. The government launched it like a kickstart of your journey in real estate, just turned out to be a big marketing campaign. But it pushed people out of their rental contracts to be involved for their own homes in Dubai, but most importantly, to be long-term committed to the city. Infrastructure developments. I think RTA is working their ass off nowadays to try to maintain this traffic, but also the blue metro line, right? The new stations that have been confirmed. I think these locations are very important for early stage investors. A locations, relaunch of Palm Jebel Ali, Naya Island by the company Van Oort, Dubai Islands, you name it, the new airport. And I think 2026 will be even better because we just started with the Loop. I don't know if you guys heard of it already. This underground roadway that Elon Musk will be building. I mean, this is just February, we're already launching these billion-dollar investments, right? So if you talk about the market, then there's a lot of things you as an investor or as a buyer, a seller, a tenant want to ask or want to know. Daan, what is my real advantage? Are we not at the peak? Is it going to crash? What should I do? Should I keep ranking? Should I buy? Well, I know 3 people in the room today that can help you answering these questions. So I would like to invite the panelists, please, to take a seat so that I can introduce each one of you. Please give them an applause, guys. I mean,
He's in the middle. Thank you.
So I first would like to start with Ian, the guy in the middle. He will be our mortgage perspective of today. Ian is currently the associate partner of Mortgage Finder. Who don't know Mortgage Finder, you probably will know Property Finder, one of the biggest mortgage providers in Dubai. But Ian has over 25 years of experience within the finance. More years than I've been alive, so he definitely knows what he's talking about.
I started when I was 15.
Over a decade of experience in the local market, So he will be helping us with all the insights regarding the finance aspect of today. So Ian, thank you very much for taking part. Please give him an applause, guys. And then we have Safi from Imtiaz Developments. For the people that don't know Imtiaz Developments, it's one of the biggest new developments going on. You know the project in JVC probably, otherwise the project in Dubai Islands, in Meda. But the most interesting part of Safi is that he's born and raised in Dubai and he was the very first employee of Imtiaz. So if there is one guy in the room who has seen everything being built, not only by Imtiaz but by everything, it's Safi. He's currently leading the top performing team at Imtiaz. So please give an applause for Safi. And last, definitely not least, we have our investor's perspective of today. It's a true honor to have him on board, Jan Kees de Jager, a serial entrepreneur, someone I really admire from an entrepreneurship view. He's the president of EG Generator, also part of the advisory council in Ras Al Khaimah. So if you have questions about Ras Al Khaimah, save it for after the panel. But he will give us all the insights about how to look at the market as an investor, as an entrepreneur, as someone who's always trying to look for opportunities instead of looking what will not be possible. So Jan Kees de Jager, again, true honor to have you on board. Thank you very much. So before we start, guys, I think it's good for you guys to also give a quick introduction about yourself, but maybe most importantly, what was the year 2025 for you? Was it your most successful year or did you put things on hold? Let's start with you, Safi. How was the year for you, 2025? Yeah, Safi, sorry.
Okay. Firstly, again, my name is Safi Hamid. I'm originally from Afghanistan, born and raised in Dubai. So
you can take the mic. I think they're on the microphones.
Can you guys hear me clear?
Yeah, let's take the microphones.
Hello. Yeah. So my name is Safi Hamid. Dan did a very good job of introducing me. I think it's not working. Hello? You guys can hear me? Okay, so he did a very good job introducing me. I'm not as great as he says, I have to stay a little bit humble. But obviously, yes, we have seen certain markets. 2025 specifically speaking, it was an amazing year for us as a developer, as a personal growth for UAE, for Dubai specifically. We have done crazy numbers. 917 billion is not a small number, you see. Looking at the global market, to achieve this kind of numbers right now is not easy. To just give you guys a little bit more light to this number, 1 trillion was supposed to be achieved by 2030. And it was achieved. 920 billion, or let's say 15 billion to be on the safe side, was achieved on 2025. That's 4 years ahead of time. So this year we're sure we're gonna touch 1 trillion market cap, trillion dirhams. So we're achieving years ahead of the vision. It shows that we're actually in the best city right now, in the fastest growing city right now, and the golden age of this country.
I just wanted to say, it sounds like a golden age. Thank you very much, Safi. Ian, please, how was 2025 for you, and give a quick introduction about yourself.
Good morning, everybody. My name is Ian. I'm an associate partner with Mortgage Finder, which is part of the Property Finder group. I've been with Mortgage Finder for the last 13 years here, and I've seen the property market and the mortgage market growing year on year exponentially. Certainly post-COVID, we've seen year on year growth, and I see that continuing probably until the day I retire, which won't be too long, hopefully. The 2025 was an exceptional year, and I think that's going to be even better in 2026, particularly with the number of units that are going to be handed over this year.
Something to look forward to.
Absolutely.
Jan, I want to give you this microphone. For you as an investor, obviously you have multiple companies where you're taking part of. As an investor, was it for you regarding the real estate one of the most successful years, or was it something where you said, let me wait for a minute? How was the year for you?
Well, first of all, personally, I moved into my new place, and I as something that always keeps an eye on investment, I use it as a split development. I bought a floor, which partly is an investment, and I rent in the hotel pool there, and partly I use myself. So every day there's still, your colleagues down there, can be very obnoxious, to be honest.
I know.
I always
we
pick.
have 3 agents sitting here today.
Yes. But they swarm me still to try to buy the apartment that I living in currently, because it's right on the beach. There's beautiful views, and but I'm personally very happy. So I'll keep it. Not on the market, not for sale, not for. But the other parties in the hotel pool, there's also an interesting development, of course, as well. You see that more and more in these mixed developments. But yeah, I think 2025 has been, for me, like the substance, the underlying substance is very important. What drives this market? Yeah. Because if it's speculation, it's always very dangerous. But you see 2025, especially, continued strong growth of very high-end and mid-end demand. So a lot of people, especially Europe now, there has been a huge migrational move from Western Europe to the UAE, which we have seen already the last few years, but now in 2025 really accelerated because of some circumstances in Western Europe. They can be cultural, they can be job related, they can be tax related, of course, security, local security related. There's all reasons why people prefer at the moment the UAE. And we're seeing the numbers also of very high net worth individuals migrating more and more to UAE. But the interesting fact, for example, if you look at the UK-UAE migration, we know there has been, because of tax changes, a lot of migration of high net worth individuals. However, the biggest demographic segment is between 18 and 25 and 25-32 by far. We know there's not maybe some millionaires, but not centimillionaires or billionaires probably in that, with maybe the exception of a founder of a big tech, or a fintech in this case, that moved also to Abu Dhabi. But that I think tells you something of at the moment, a continuing strong market in terms of demand.
Amazing. Thank you very much, Jan. So what we're going to do is we're going to discuss a few topics today, all right? So one of the first topics I wanted to touch base on is the scheduled handovers, all right? The forecast for this year was around 71,000 units to be delivered, and they only expect 34,000 of these units to be delivered, which is quite impressive to see these numbers to me. And I want to start with you, Jan, to ask you, do you use these numbers where they're saying the amount of scheduled handovers on specific areas? Do you use these numbers when you're looking for a new strategy or a new investment?
Yes, but you have to relate that, of course, compared to the migrational demand or structural demand. And then there's an interesting discrepancy between the launches and the handovers. If you look at launches, it's a bit scary, to be honest. Like if you have 200,000 launches or something, and you see maybe 60,000 in that segment, people, or 50,000 in that price segment migrating, and then on average maybe 2 people share an apartment, or 1.5. Then you think, okay, what's happening with all that supply? That is very, to be honest, that is also, you always have to keep reminding the substantial. Why, of course, also? Because that's something that I think you're always, I like you because you're very honest about that. Yeah. But many of your colleagues in real estate and developers, they don't know the numbers, and they deny even the history of huge, in the UAE, of huge decreases also. They only predict capital appreciation, which is like, has been between 2014 and 2021 a 6-year period of gradual decline also. Although on the long term, the good thing is UAE has been in the long term, a very profitable market, also in terms of capital appreciation, and specifically also in rental yields. And of course, the tax structure and the governance is very good. It's also landlord friendly if you compare it to many other developed countries. There's a lot to say for it. But people also has to be known that there is also obviously risk and systemic risk as well. By the way, your low percentages of mortgages is helpful because we know that systemic risk in a market that is highly mortgaged, I'm former finance minister, and that makes me even more scary about the market. So I think it's very good that there are still so much cash buyers in the market with a lot of their own money, because that always gives some substance to the market as well. But yes, you're right. Keep also an eye to the launches and to the people really in the demand. Then we see more launches than demand. But on the other hand, we also know that the actual handovers is much lower still at the moment. So that is, I would keep an eye on launches, on handovers, and then when are those launches going to be handovered? And also, where is the future in the next few years demand coming from?
And I think that's something where Safi can really help us out, because obviously you're part of a developer. Imtiaz have handovered a lot of units, is launching a lot of units as well. I want to firstly ask you, how do Imtiaz time manage this? I mean, there's a lot of projects being launched within the same area, by the same developer, by different developers. They're all going to be completed in the same year. Well, it's scheduled to be completed in the same year. I want to start with giving Imtiaz a compliment. For you guys' reference, they were always on time delivering the units, but that will be my next question. Maybe you can help us first out. How do they time manage that with Imtiaz?
Okay, very beautiful question. This is something which is our strength as a developer. We're one of the few developers who also have their own construction company, which means we fully built our own buildings. So not only we design them, launch them, sell them, manage them, we also have full control on the materials, we have full control on the timeline of the project, on the quality, and also executing the design that we have promised out in the market as renders, right? So coming to Dan's question, how do we control that is that as much as our company is growing, our VICC, which is our construction management company, is also growing as fast. So what we do is we're the only developer, by the way, if you go to our website, every single month of any project, we go and we post it online on the construction site. So every month we take pictures of the construction site and we upload it on our website. So even if you're buying a property, you don't have to come to Dubai to see what's happening to your project.
What's the real advantage of delivering on time? Because there's around not even 50% will be completed on time. So what is the real advantage as an investor investing in projects that are being delivered on time? Like, how do you manage to do that? Or how does the other developers not manage to do that, delivering on time?
See, the number of developers who own their own construction company is very less. It does give a very big impact and a very big control to us to be able to complete it on time. We are not relying on a third party. Let me give you guys a fact. If you're a developer, you own a plot and you want to start a construction with a third party, from the day you acquired the plot and you design the project, if you want the contractor to everything goes smoothly, do you know what's the time period their machines will be mobilized to the plot after signing all the contracts? It's 3 months. Do you know how long it takes us? 2 days. Because it's our employees, it's our staff, our laborers, our machines. It takes us 2 months to 3 months over there. And we also push, we see our projects, we don't have any discrepancies between the construction and the real-time progress happening with the developer, because we have full control. It's a fully integrated company, which gives us much more transparency in terms of construction progress and materials and quality.
How much have you delivered so far?
We have,
if you have a question, let's just raise the hand and it will be just tomorrow, please.
Yeah, he raised his hand. So far we have completed 7.
7 buildings.
7 buildings.
And how many units is that?
If we're calculating 150 per building, because it was a low-rise buildings. Yes, it's a small rises. But this year we have 14 projects. Out of the 7 projects we have completed, 5 of them was before time. We have promised 2 years completions. We are completing in 1 year and 8 months, 1 year and 9 months, with maintaining the quality. We have completed one of our recent projects, Pearl House 2, in JVC, in 1.5 years, which is quite impossible in this market.
Check the quality, by the way. Sometimes building quick doesn't mean it's good, but the quality is still there.
Yes.
I want to move to Ian. Regarding this topic, Ian, do banks get stricter in sense of financing in areas where there is more handover to be scheduled, or is it something that banks don't even take into consideration?
They certainly take that into consideration. I do slightly disagree with Jan in terms of that split between cash buyers and mortgage buyers.
Yeah.
I think there are strict controls with the UAE Central Bank and also with the individual banks themselves in terms of the customer's eligibility for affordability. And I think these strict controls do help the market in that respect and try and maintain that status quo as well. Excuse me. In terms of projects that are being handed over, these projects need to be listed with the specific banks to allow them then to, and the developers would need to provide certain documentation to the banks to allow those projects to be listed with them, to then enable them to offer finance to individual customers that...
I want to move with that question to the next topic, which is about hidden leverage, right? All these units that have been bought and off them, most of them are being paid through payment plans, which is basically a hidden debt. I personally see a lot of investors coming to me saying, Dan, I want to refinance the last down payment, right? The last 50% I want to do a refinance. Is refinancing increasingly being used to handle the risk of the payment plans? Like, do you see people coming to your office more often asking about these payment plans to be financed?
We do, absolutely. Clients enter into a sales purchase agreement, sometimes not having full visibility on finance options that could be available to them. And some clients do struggle then when the property is being handed over and the developer is demanding the final payment or to enter into that post-handover payment plan. They struggle to maintain those commitments, and then look to maybe to finance the final payment.
Yeah, and Jan, have you used these payment plans in your advantage before? Have you this hidden debt which is currently in the market? Can you use it as an advantage for yourself?
Well, first let me react to, because I didn't say that mortgages is bad, so I myself. But what I said is a fact. Highly mortgages economies are of more of a systemic risk than not. That is obvious. That's
that I agree with. Yes, absolutely.
That's the only thing. And I do agree that being a finance minister, I managed the debt crisis where the LTV ratios, loan to value, was 120% at that time.
72.
That is here you can 80, I think, up to 80 or something. But so that is already much better. But even if everyone would buy at 80%, then for banks there is still a more systemic risk than if 1/3 of the buyers only use a mortgage.
I totally agree with you, Jan. And when I was a mortgage broker back in the UK, there were 120% LTV mortgages available
that's
with Northern
crazy.
Rock, which is now no longer a bank. Recently here in the UAE, where up to last year, where people could incorporate the DLD 4% fee and the agent's 2% fee into the mortgage, which effectively took the loan to value to 84%. The UAE Central Bank brought in some restrictions in terms of that additional loan to value, having,
exactly, very good. Yeah,
absolutely. So, as I mentioned, the central bank here does look at these aspects very, very seriously to try and alleviate any potential crash in
basically protect the market.
No, for sure.
Yeah.
And
and as to the hidden, a very good point. Besides that, so the mortgage is relatively healthy, especially when you compare it to northwestern European markets. These are still, Germany is also very low LTV, but for example, the Netherlands still, I lowered it when I was finance minister from 120 to 100%, plus additional cost 102%, which for me it was still to be honest, it's still a bit too high. But politically, that was at the max that we could do. But ideally, I like the UAE regulation much more than, for example, in the northwestern European markets, as from a systemic risk point of view. But you are right. In the UAE, you see something else, which is a hidden leverage, is the payment plans. And I know many people, and there's always risky that they, with all the money that they have, they can do the payment, but are not prepared.
Especially the agents advising them into doing that.
Yeah, and that is risky, because especially as we have seen it again between 2014 and 2021, when people could not come up with the second payment or with financing, then they had to sell at a loss. So that is very
my
difficult.
Next question for you: do you see more distressed deals entering the market? Because I've personally seen a couple of them arising from last month, depending on the developer a lot of times as well. But do you, as an investor, obviously you spot the opportunities in the market? Do you see them arising more and more often?
A little bit more, but not like in when I arrived here. It was just a few months before COVID, and then it really was much more.
Okay.
Now, for the first time in years, I've seen my inbox coming in with more distressed deals indeed. So there is some moderate increase at the moment. So interesting I would also keep an eye on that, of course. Then as to your payment plan, I'm typically a cash buyer, and my IRR, I will compare what is the IRR of developer, so sometimes I negotiate. I did that in a few deals. I negotiated a discount based on the IRR of the developer, which was like 8 or 9%. But with hindsight, there is very small print, and not everybody is like Imtia. So when they delay, you have some agreement that delay will come into the discount. But then it becomes a little bit blurry, even though you have that on paper, because then they can revoke some outside reasons of delay, which for me, I said, okay, that is, maybe you can invoke that clause for a penalty clause, but not for the interest clause, because at the bank would also not, if you get your money from your later. So you have to be a little bit careful for that, I know now. But typically, of course, if you have 3 or 4% in a bank account and you can get a discount based on an 8% interest rate, then it's interesting also to use that. So sometimes in a few deals, I paid everything in advance, almost everything, and use that but I do not use it as a finance instrument.
Exactly.
I would be very careful for that.
Yeah, and Savi, obviously your developer is creating these payment plans. How do you create these payment plans to make sure that, according to market stability, basically, or how does these come up with the payment plans?
This is, to be honest, something very interesting that I found out after years of working in development. People actually do not understand why payment plans are how they are. Okay, firstly, you're buying an off-plan property, so obviously we will have to go with installments. But if we're specifically speaking about this topic on why certain payment plans are how they are, for example, 60% during construction, 40% on completion, or we even have in the market now the super aggressive ones, which are 80% on construction period timeline and then 20% on completion. One of something that you guys really need to be careful of, never to look at a payment plan where it's 30, 70 or 20, 80, which is during construction, 20 and 80 on completion, is actually the more aggressive the payment plan, the more secure is the project. If you understand how it's linked. If
the more payment made during construction, the stronger
the project. Yeah. So this is not only for us as a developer, it's for the whole market. It's for if a project is being 30% during construction, which means there's only 30% on the escrow being worked on and the extra cash flow coming from the from the owners of the developers themselves. But if a construction, a payment plan is 60-40, 60% is being poured into the escrow, the percentage or the risk is going to be way lower of the failure of that developer and the whole market as well. Which also, by the way, coming to the investment point of view, anybody who looks at ROI should also look at ROE, on how much equity you're putting in. Because if you're going to get out of the deal on completion before paying your completion installment, on ROE you make way more money than paying it all up front. And on 60% of the amount you make on ROE up to 100% profits. We have seen it multiple times.
Any comment on this?
Yeah, there's one caveat, of course, though, because the payment plans are completely free in Dubai, obviously. So you see, for example, if you have 60% payment plans in advance, that they are quite a few times they are based on time, not on DLD certified completion rate. And that is, of course, very risky because, that doesn't say anything. Because then you're paying before time, and as you also know, a lot of developers are not on time and actually have huge delays.
Having it attached to construction.
Yes. If you have a payment plan, it's very important that the milestones are based on construction updates that are DLD certified. There's a lot of good developers do that. And also, to your general rule, that's not always. I also had a very prestigious developer. 70% was on handover. And everything, but that is a very branded 5-star hotel chain, very good. And then, of course, your ROE is even more if you have that. In my case, I took the gamble and I paid in front, but before I got a good discount of that. So it depends also, I think, of the quality of developer, how you evaluate the payment plan. But with a typical, there's some big developers that are notorious for being late, and then just having a big payment plan in advance based on time means essentially that you could end up 60% paying in advance with 20 or 30% completion.
Don't let it use them as a marketing tool.
Every month 5%. Or something, or every quarter fight. What does it say? It is. Then you can also do it in advance.
So, before we go to your question, this is a very spicy topic that usually doesn't come up.
Yeah.
So I just want to shake it a little bit more. I'll give you guys an instance. Okay, why us as a private developer are actually raising the bar of the development game is absolutely fantastic right now. We are actually challenging developers who are governmental or semi-governmental. Let me give you an example, then I will tell you how we're raising the bar so much. I sold, back in the days, a villa which has 5 years of completion date. And the first year finished, and I was a broker back in the days. I get a message from the ex-developer who is fully governmental, says groundbreaking started after a year of paying them. So I was like, with what face should I send this to my client that they have been working on your money when the groundbreaking happened after the first year? Do you understand? That is it's working for them as a government developer, but 4 years of construction, groundbreaking is after the first year, which means 1 year, what was happening there? Yeah. What was happening on the project? You got me?
I got you, definitely. So I agree, but overall, the government projects over the long term, and to Jan's point, the returns are very good over a long-term period, so it doesn't really matter. But more importantly, what I find interesting is the 20% down payment by developer. Every project that is announced, you as a developer have to pay up 20%, right? Mm-hmm. How is that funded in general?
Why is it 20%?
How is it funded? How do you guys fund that? Do you fund it with the
you have to have it pre-financed, right? Yeah, you have to have.
No. I think I am not clear with the question.
Escrow, we start a project.
Yes.
20% of the project has to be down paid by
as a developer. Yes, we pay it cash.
And how do you pay that? You pay that with cash money?
Yes. Yes.
What you see, to your question as well, what you see happening more often is that a group of investors come together and they finance the plot for the developer because, like you said, it has to be cash up front. And developers that are expanding and getting bigger, they need cash flow. They need to have cash to pay the staff and whatsoever. So then they have other investors paying the plot for them, and they get their money back with an interest rate.
I think his question is that he's right. Dan is exactly correct. We are called King of JVs.
Investment, by the way, as an investor.
Yeah, he's right.
A bit more
But as we are also known as king of joint ventures, where we don't use our cash on our plots. It's very clear in the market that we do this. But it's a very secure model. We can speak about it in another session or in private if needed. But coming to your question, he's asking how do you pay that 20% or 30% as a developer to start the project and get the escrow account. Now we do it as cash, we pay it, we have that kind of money. But in the market there is also option for developers to do a bank guarantee, which is openly available, but not much people is aware of this.
A question for you, Daan. Earlier on the numbers, we said this year 71,000 are going to be handed over, and then only expected 35,000. But aren't we the lag of last year? Is that being taken in?
Yeah.
Because we hear it every year, so you would expect every year more. I think
Exactly.
these numbers are much bigger. So I think 1999 or what is it?
Yeah.
So 2019.
Yeah.
Then overall, how many units were handed over at that
Exactly.
time?
If you, for example, look at last year, I think it was only around 35 or 40% delivered in the year 2025. And they will all move to this year, 2026, and even some of them will move to 2027.
But there you already have that 50, so that's already 50,000.
Exactly, so it will add up, and if you calculate it, the peak will basically be happening around May 2027, where most of the delayed projects will be handed over, including the projects that have been delivered on time. So that's very hard for other developers, but also for investors to time manage that handover schedule. That's why also we brought a topic on board. How as an investor can you make sure that you're not investing in an area that gets oversupplied in the moment your property gets handed over?
And just on your point where you put there, could lead a rise to distress-driven sales.
Yeah.
Isn't it just logical numbers game, since there's so many projects coming to hand over in the next, whatever, 5 years, around 400,000 I believe.
Yeah.
So then of that, a large amount, or an amount, percentage will be distressed. So as a result, we have absolute more distressed deals.
100%. But the topic was more as well focusing on what you see happening is because of these hidden levers and payments plans. We see a lot of foreign investors that are not quite aware how these payment plans work. And they don't think, like Jan already said, they pay the down payment with all the money they have and they think life will be good in the next few years and they will pay off the installments accordingly. And then something happens in the private life or whatsoever and then they can't afford paying it and they will put it for below the OP price back to the market. That's what I have experienced lately a bit more. But it's good to hear from Jan's point of view that it hasn't been more than it used to be in 2021, for example. Because I thought it was
I think it will happen a lot. I think what I'm seeing...
Probably, like you said, if it is a numbers game in 2027, when we see more handovers taking place, you obviously see more distress deals coming on the market as well. It's an emotional investment for a lot of people as well, so they will take use of that as well. I want to finish this topic, Ian, with a question for you. If at what point does hidden debt start to give a false picture on price and demand?
Sorry, can you repeat that question, please?
At what point does hidden debt, so the hidden leverage we're talking about, give a false picture of price and demand? Like when do you see that the debt has been taken, the payment plans that have been taken, is it still giving a real picture of the supply and demand? Like we see 70% has been off plan, right? At what point do we need to see, okay, the market is according to supply and demand?
Well, we don't really see that side of things. It's only at a point where, for example, if a client is in a position where they are unable to afford the final payment on demand, is where we get involved with trying to obtain finance for them to be able to make that payment to the developer, so that the repossession proceedings don't get conducted. So it's a difficult question for me to answer because we don't get that visibility.
For the next topic about the target groups. I mean, I've personally seen the demographics been changing a lot, and I'm only here for 4 or 5 years. You already have been here for more than a decade. I want to have just a direct question to you. How have you seen target groups changing? Who is sitting on the other side of the table nowadays?
It's a good cross section of different nationalities. For example, we see a lot more investors from the UK, as Jan mentioned.
Just put the microphone. I think it
Sorry.
sound better. Yeah. Okay.
Yeah.
Yeah.
Okay. So we see a lot more inquiries from the UK, India, and Europe as well. Scandinavia, a few from the Netherlands as well.
And
but
more families, or is it still main part is just young professionals entering the market?
again, it's a good cross section. It really does depend on affordability as well. Most of the clients that we see as individuals are buying apartments, and then we see, people who have salaries of 40,000 plus, have families then looking more towards townhouses and villas.
That's a question to Jan, but isn't that a very good sign for the economy that more people have confidence in the local economy, they have the jobs, and that they're willing to take out mortgages? Because one of the big trends I find is that local people were renting, and now they're starting thinking of paying out rent, wasting money, and start to buy. And I think it's very positive that they take out mortgages.
Oh yeah, absolutely. The main reason as an entrepreneur why I am in UAE is that the huge advantage that you are fishing in a world pond of talent and labor market. There's almost no country to think of, with the exception of, I think, some Gulf countries. Even the US is not there anymore. That when you recruit in the worldwide market. Our first 60 hires were 40 different nationalities. So can you imagine? So there's nothing in other. I have offices around the world from the US to the Philippines, but there's no country where we have such a diversity, and that most of the people that we are recruit are actually coming to this country from outside. For us, and they all need housing, obviously, so they all are in demand, and many of them start at the demand as a tenant. Definitely, they all start as a tenant. That's like because they don't know the market, they want to, and they don't have any credit history, because they're new in the country, and then securing a bank account because we help them. It's okay, but a mortgage, of course, takes more time. Obviously, that I can completely understand. But then the ability also for young professionals with a good salary to be able to get a mortgage is extremely important. And fortunately, that improved in the last few years. So that is absolutely something that I applaud.
And do you adjust your strategy on that? And because you say most people entering the market, we've seen the population growth, everybody starts with renting. Do you see an advantage as an investor to make use of this big rental population?
Well, we just helped, but it was not as an investor. But we bought a few apartments to on a short term to tenant out to employees. But that was just to give them a secure landing in the first 3 months, because they cannot stay longer, because we really want them to. But when you are here and you're still in the visa process, you cannot get an HI, for example. So you have short term, yeah. And then if you are here land in November, well. Good luck getting in Marina or JLT a short term, and then people are like, So it's good that we have that option, but we try to move them and to advise them also. We're close to a metro station in JLT, so we say, for example, there's also new areas close to a metro station, in JLT, but also further more to the south, there's the metro stations with affordable options. And
I was just going to add to that. Over the last couple of years, we've seen a lot more clients become disillusioned with landlords who try and exponentially increase the rent, and then think to themselves, well, why am I paying 100, 200,000 per annum in rent when I could be putting that towards.
Agree on that. Who's being a tenant? Yeah.
Okay. Last year we saw 74% of our inquiries coming from end users who had been here for 3, 4, 5 years, and now just having enough and seeing the.
For us, it is important, because I really prefer people that buy in a stable situation than being at the risk of a tenant that could increase 20% every year. Because my employees will be also, well, you know how it macroeconomically works. If they are faced with 20% increases annually on rent, they are asking me what's happening with my salary. So I think and having an ownership also gives more long-term stability here in the UAE. So for that segment, the young professional with a positive career, the mortgage market is very important. And we also kind of stimulate and applaud that is possible. Yeah.
And the demographic, Safi, is that their salaries, let's say, is it in line with the prices being announced in the projects that you for example, the project in JVC you were talking about, they were sold for an X price and they probably will be rented for an I price to make sure the investors get the ERI. Is that still in line with the salary of these target groups?
See, obviously, as much as the real estate market has boomed, the economy of the whole country has gone up as well. I mean, I'm sure if certain people over here have, if you're an owner, you have already given high raises to people in your company. People who's coming right now, there's a lot of raises happening, but as well as there is also survival of the fittest, you know. The skill level that you need in this market right now is super high. The top 1% of the whole world is in Dubai. So obviously, when you have those kind of skills, the companies are all making more money. The raises are increased, bonuses are increased. And I have seen this. I have 6 siblings. All of them are working. All of them make great money, to be honest. Yes, it is supporting. But according to just one point I wanted to point out is that the kinds of people that are coming in, or the categories of people that are coming in to Dubai shifting, is actually showing in our projects. Initially, when we were developing our buildings, we were more of a studio and 1 bedrooms, and one unit of 2 bedrooms per floor. We never made the 3 beds. Last year, because families were starting to shift and we were so much pushed and requested for and demanded for, that we also started to increase number of 2 bedrooms and also started to create 3 bedrooms where we make the least money, by the way.
That's interesting to hear.
Yeah, so
the product according to the new target groups arriving.
Yeah, so that has actually affected the kind of products we do make. And we are a developer who wants to provide for a mass number of people. And if we don't do 2 and 3 bedrooms, which are the most demanded right now, it will be shooting ourselves in the leg. So it has actually affected us.
Sorry, question? Yeah, your question.
Someone, you had a question?
Yeah, my name is Louis Martens, working at the Dutch consulate, mainly in climate neutral real estate. And I would like, we can also park the question maybe to later, but it relates to the lifestyle and the newcomers. I was wondering whether you also have more green building, green mortgages, because lifestyle maybe demands also more environmental affairs. I was wondering whether also climate neutral building is taken into account with regard to the suffering from the as developer, and also for mortgages, green mortgages, etc.
Very good question. Let's start with the developer maybe first.
We're talking about sustainability.
Yes, sustainability within the projects.
We are not only from now on, we have a vision from day one. If you notice, our project have been since day one fully furnished. I don't want to speak about the product, but what I'm trying to explain is from the day one till today, we have had a very similar product, the same thing. We were doing a niche market till today, and the sustainability, we are part of EGC, right, Victoria? So we are part of a sustainability where we are one of the few developers who are part of this committee. I just forgot the name, but we are also avoiding carbon footprint, and we are a green building, all of our buildings. I'm just not sure what it's called, but I can tell you about the session.
Can you maybe answer the questions regarding this green?
Yeah, absolutely. So there are a small number of banks that do offer preferential terms and conditions to clients who are purchasing properties in a project that would be deemed to be sustainable, green. However, the number of projects here in the UAE are very limited. I can think of Sustainable City in Dubai and also Tilal Al Gaf. And then we have Sustainable City Sharjah and the new Sustainable City in Abu Dhabi as well. So there are very few green projects in the UAE. I think developers should be looking at more construction on this basis, but certainly in terms of finance, there are preferential mortgage offers available. They don't differ too much from the standard product, but there are some incentives for people who are purchasing in these types of projects. Yes.
I think that is a market that still has to be developed more. You see, the UAE comes from an energy mix that is relatively, in the terms of the energy generation, relatively green, but there's a huge demand. Which is really the problem, of course, in this country, with a lot on depending on electricity demand. So, but that is clearly in the vision and in the targets of this country to become also a carbon neutral economy. So that is on the vision, and the government is also working on that. So I expect to see more and more, because Sustainable City is a good example, but it's a very small project. It's one of the smallest, which makes it also interesting to live probably, but it's a very small project. But I think that sets a standard, and I think also for other projects. As to the affordability, I think that is, to be honest, it is a gap, because obviously, the developers here are commercial. I cannot blame them. That's logical. So they sell at a price point that they can sell. With a lot of investors, not end users on the market, you've seen a lot of demand, and also hence price increases. So to be honest, for that emerging, growing, very fast growing group of people between 2022 and 30 coming to Dubai, you've seen there has been a gap, especially in Dubai, compared to, for example, Emirates like Sharjah, Ras Al Khaimah, and even Abu Dhabi, where affordability is higher. So I think that is definitely, I would like to see in Dubai. And then, of course, it cannot be close to the coast, but a bit further, but with a metro station. Push back, but with a metro station. I would applaud new developments there that are more affordable than the ones that are now being launched, with the expense of being pushed a little bit further to the desert, but with a good infrastructure, not with car, but with a metro station. That would be amazing. It is in the plans, but it will take a lot of years. But we do need launches of studios around 600,000 dirham, one bedrooms out 850 max 1,000 dirham.
Aren't you afraid that the products won't be good enough then? Because if I see a developer pricing a studio for 600 now, I will double check everything about development, because good developers are paying, having a bit
because
higher
exactly yes,
well.
but that's also because of the demand is now high, and they can afford to have that quality. So the only compromise for that price point I would make is the location, which obviously cannot be a premier location, but with the help of the developing infrastructure of Dubai, close to a metro station, in one of the new metro stations, on the new Blue Line, for example, or something, or a bit more further to Expo City on that line. And it would be amazing that there would be good quality, affordable launches of studios, one bedroom, two bedroom.
We will hit on the top.
Yeah, I think I agree with Jan in terms of pricing. I think if more developers took Sustainable City as a prime example and saw the level of demand there, which has been even since COVID times, and the stability of this project, where people don't tend to sell, they are more than happy there. I think that pricing structure, they would absolutely see no issues in terms of being able to sell these properties.
Is there any questions from the audience? Yes, sorry, the guy in the back.
Yeah, so you were talking earlier about some pent-up supply, and that might result in distressed deals. So two questions on that. Would you see that concentrated in some kind of subsector of the market? And secondly, could it also be a strategy for investors to take up these distressed deals when they really speed up?
Good questions. I will answer the first question, and I will let the second question be for the investor, Jan. So what we see is that every area is so different, has such a different pipeline being scheduled. Not only real estate, but also infrastructure related, right? If you see a lot of numbers of handovers taking place in one area, it isn't immediately a bad sign, right? If something very big is being announced close to it or within the area, it can be very good sign as well. For example, the JVC, right? Is the area with the most scheduled handovers to be happening in the next 3 years, and already for the last 2 years. But at the same time, it's the area with the most amount of transactions in rental contracts and in the contracts of properties being sold. Which, what I personally think, to answer your question, is when new areas are start to develop better and people are going to be pushed out a bit more towards the desert, then these oversupplied populations are not the only areas anymore that people can afford, but there will be more areas people can afford, so they will spread out basically. And then it's very important that I'll let Jan Kees answer your second question about distress deals, because obviously from my point of view, I would say I already have a few clients that are having cash on the hand to look for these distress deals and buy them for a lower price and then just rent it out, because this rental market is so strong, even in the areas where there is a big supply.
Yeah, well, yeah, I know very well when I was 18 and I started studying business administration at university in the Netherlands. In one of my first lessons, I was taught two things. Is first, from taking a profit, nobody got poorer in history. So I always took that into account. And the second one was making money in buying and selling real estate. By the way, I think tenanting out and making a return is a more long sustainable model, probably. But if you're in making money in buying and selling real estate, the money is in the buying part and not in the selling. So yes, obviously, when you buy below OP, that's the first profit you already have compared to the OP, and typically your ROE is better because you're paying later as well, and the person that sells to you has had money that not only is at the discount but also later as well. So also the discounted value of the money. And in nowadays, with current inflation, current interest rates slowly picking up, that is also very interesting. Of course, there's always the reason behind distress deals that you have to evaluate as well. But there's many reasons which are just normal. For example, as Daan already explained, that people committed to a payment plan with the idea of having liquidity, of selling something and that sell typically from they're living abroad, they cannot finance it, and that liquidity did not free up, and then they still come in a distressed deal situation, could be in a good area. And you see it everywhere. You can see it in prime area. You can see it in below prime area as well. You see you see it in luxury, and you see it in affordable. And I think it's a risk preference of the investor where he would be wanting to buy in, because in affordable you're able to tenant it out for a long term. But maybe you have some risk of when the market goes down, that in that affordable area, the market typically goes more down than in a premier area.
Exit strategy will be a bit more.
Yeah, exactly, exit strategy. But if you're a long-term return oriented person, investor, that could be very interesting, because rental yields in that whole period could be because still a studio that you buy at an affordable amount, you always will be able in Dubai to rent it out, always.
The demand is there.
Yeah, exactly.
I want to have Safi's opinion about these questions as well. Maybe you can add. So about the amount of handovers taking place in the areas, just going back to the previous topics, how that basically is happening now in your projects with JVC. You still see a lot of demand for your specific project, but you also see a lot of projects in the pipeline in that area. Will it affect the current projects you have there?
There's another topic I would want to comment, which is super important, about the affordability, because we are really working on that. Coming to this answer, for example, let's take JVC, because we had our most buildings handed over in that project. The market in general does not apply to us because our product is very niche. Even though if there's a high competition over there, high number of completions going on in that location, but when our products comes in as fully furnished, they're all smart home system, there's so much value in our buildings. If you just enter our lobby, you will not feel like you're in JVC. You will feel like you're in some 5-star hotel. So our projects are very niche, so I will not be able to put ourselves in that place. We're achieving the highest rentals of JVC.
I think that gives the answer to your question, that if you are looking at an area that gets a bit more oversupplied, that you really need to choose a product that is unique. That is not the same as most of the other projects being handed over. But if you choose a property, for example, that gives more than just the product itself, like let's say a fully furnished apartment or extra amenities that really benefit to the tenants, I think then you can still really stand out because the demand is there. Sorry, Alexander, you had a question before.
No, just like
Okay.
just to add to your case point, yeah, it's across the whole segment what I'm seeing. For instance, one of the best developments at the moment, news coming up, is Tila Gaf. You know, it's by Majid Al-Futan, beautifully done. But there you have top villas, you know, they were sold at the time off plan between 20 and 30 million dirhams. They're now coming to handover. And you know, they were bought by more or less by insiders, people who have good connections, they got the first chances. However, now they have to pay at 50% is on delivery. These people have to pay 15 million dirham, whatever. And now you see already some of these used villas, yeah, you know, that are being offered for sale. So that's what's happening. So people were taking, oh, the market will go up, and now so I'm working with one of my investors to get one of those. But we have opportunities. There are 6 people out there. Yeah, it's a rare commodity. I think there are
And
only
the area
10,
is amazing.
Yeah,
So
there are only
it's
10 one
another
on a big lagoon. But yeah, you're talking about 6 people want to sell. So we're just waiting till the handover, and then it comes again. And I think you have it across the whole thing. I've seen it in Dubai Island. I've seen it here, Jumeirah. Everywhere you see distressed sales. But yeah, you need the information. You need to be in there. You need the right connections. And
We
some
had
of them go very fast, right?
We had another question as well, I think, Afdik.
Oh yeah, I was just, I wanted to make a remark that when you talk about affordability, I'm a freshman relatively, but quite a lot of developers say, well, sustainability fine, but if it makes my product in the end more expensive, I will not do it. So from that point of view, I doubt whether a lot of effort is put into becoming more green, more sustainable, if the one that buys the apartment and so on, who are not willing to pay more than the average price. So I'm not that positive about the UAE becoming more green in the near future.
See, I would completely agree. Firstly, this is not my strongest subject in development. But yes, I'm aware we're part of certain initiatives. The government, from what I know, is working towards, because we work super closely with the DLD, they are going to bring in these initiatives. The market hasn't catch up to this level of strictness, to be more specific, like UK or the other countries. This is a part where they're currently working on towards. But I will tell you this, if DLD applies it, nobody can run away from it. It will be imposed and everybody will have to follow, regardless of it being expensive or not. Once it's there, the developers will not run away from it.
There's more and more regulations coming up, and for all of you in the room, if you need sustainable green solutions, call the consulate, because there are many Dutch companies that are working in that field and are most happy to assist you in your journey to a greener economy.
The Dutch definitely know how to do that.
Yeah.
I can tell you that.
There's one guy as well.
Yeah.
My name is Tom Safari. I'm a legal advisor from Netherlands. My question will be mainly about pledge, not mortgage. So we are providing services for corporate structure, from my understanding. So probably from financing deal, it will be appeared. Do you have any indicators that the companies like investors purchasing real estate through SPVs and of course through financing deals, and which perhaps can be seen through pledging of shares in the SPVs?
Could you repeat the question a bit louder to Ian so he can understand as well?
So my question mainly about real estate purchasing, but through SPVs. So do you see often that SPV, but also not, of course, via pledging, they can be financed and purchase real estate. So do you have any kind of indicators, any kind of numbers that would be relevant for this topic?
To be able to purchase a property through an SPV here in the UAE, it's extremely difficult, either as a resident or even more difficult as a non-resident. The liability still remains on the individual who's set up the SPV. However, there are a very limited number of banks here that would be prepared to offer finance on this type of structure. And the most difficult hurdle to overcome is with regards to the paperwork, because we've been through this process previously for other clients where we could obtain the finance for them. However, on the day of property transfer, the DLD blocked the transfer because of the paperwork, and it seems like the Dubai Land Department are trying to steer people away from owning properties in an SPV here. It's possible, but very, very difficult.
And it's a very per emirate different. Like I also have not an SPV, but well, an entity, official entity, and there's strong regulation in the DLD which entity can buy in which areas, even within Dubai, but let alone in other emirates. For example, Ras Al Khaimah now has a SPV structure. I talked to them, and with that is really an SPV, very easy, and there you can buy not only Iraq but also now Abu Dhabi real estate, but not Dubai real estate at the moment. But they have this cooperation with Abu Dhabi. But I know from RAK, within RAK SPV, it's very easy now to do RAK and Abu Dhabi real estate. But you're right, the DLD. But and the problem is I had to go to the highest level of to ask, do I need a DMCC entity to buy DMCC real estate? Nobody is there to really prepare the answer. I had to go to the highest level, and well, then they said if you do Jafsa is also fine because that's the mother of free zones, and maybe Meydan. I said, why Meydan? Well, Meydan is they have a very strong link to the family. Okay, so in the end we used Meydan entity, but that means that if you are, for example, a TCOM entity, that you could end up with the DLD blocking it. So you have to be, because it's difficult at the moment to get 100% certain. So do your due diligence on that. Yeah.
I want to move on to
Maybe
the.
I can add
Sure.
to our colleague. I agree. SPVs are very difficult to obtain finance, but in the past, in the old days. RAK companies could own property in Dubai, and the Jafsa companies could own property in other emirates. This has changed over maybe 10 years ago or so. But if a family is thinking of inheritance, of succession planning, and they don't need finance, then having a company is much better, because if a person dies, the company doesn't die. But if the intention is to have finance, to finance the company, that's very difficult in my experience.
Exactly, and the RAK structure that I explained probably could still have finance problems as well, but I know that is mainly used for family offices that start a RAK entity, which is a transparent entity. That's also important, so you do not have to pay corporate tax on that, because it's tax transparent to the UBOs, but that applies to RAK and Abu Dhabi for so far. At the moment, not Dubai, because you're right. Those rules have changed, and maybe they will change them back. It would be, for me, it would be interesting that a UAE entity can do UAE-wide business. That also in real estate. I think that would be very positive.
I want to move on to a very interesting topic, guys, the new hubs, basically, because I think there's a lot of money being involved in creating fully new hubs. I mean, with the Al Maktoum Airport and the Dubai South around it, the relaunch of Palm Jebel Ali, where we had last year the first projects. I want to start with you, Safi, and then go to you, Jan. I want to know, just a direct question again, 3 areas that if you would invest now, and the handover would be in 2030, you have to choose 3 properties. One, there's going to be a young professional living in. The other one will be a family living in, and the third one will be a tourist. So I want to hear your top 3 areas for these target groups if the property is being handed over in 2030. So keep in mind all the developments that is going on around Dubai.
This is a very tricky question.
You can only choose one.
Yeah. See, if it's family, definitely I will have to go to Dubai South, because it's the future. If we're speaking about 2030. The airport is going to be around that location. It's a long-term plan, and it will make more sense in the longer plan to buy in Dubai South for me. But if it's about a young professional, definitely Meydan, Meydan Horizon currently to purchase like today. Meydan Horizon is the only premature location within the city that I would consider, not Meydan in general. Meydan Horizon is a strip of it. And if it would be as a tourist, it could be anywhere, but I would love waterfront communities where I have a lot of projects as well. It would be Dubai Islands for sure. And then by 2030, if it's the aim, all 3 of these locations are premature locations currently. And I would say I would make money, I would enjoy, and everything.
Very interesting answer.
Yeah,
For Jan,
all
for
3
you
of
as an
them.
investor, who is the one?
I'm a little bit more south-oriented than because for me Dubai Islands and Meydan is still a little bit north, and it depends also, of course, what your preferences are and where you work. Because if you work in Business Bay or downtown, or in the future where the airport closes, there will be new development. Would be probably mixed development. So if you work there, then those areas are perfectly fine. But to be honest, also from a personal perspective, this last year I didn't go to the WTC GITEX. I only went to the Dubai Harbor GITEX part because the year before that was really a nightmare, and I'd see anything between Sharjah and up to Marina, you could say, in that area. If at some points in time you have to be somewhere. It took me, was this an 18-minute commute from me to Business Bay in a restaurant? It took me 1 hour, 15 minutes last time when you are there at 7. So this year, the GITEX will be at the Expo. Definitely I will go again to both the Expand North Star and the GITEX because they will be there. And the infrastructure from the south of Marina upwards to Abu Dhabi, if you cannot do everything by metro and public transport, then definitely that part is better developed. We have to be honest about that. Yeah. So, and of course we see in the long term, but that takes time. But as an investor, you also look at the long term. We see the center of Dubai shifting from more, you could say, maybe downtown Business Bay. The south is much more developing. North is almost developed, and there's Sharjah, which is already very busy. So you see future developments over the course. If Dubai wants to go from now, when I arrived in Dubai 6 years ago, it was around 3 million. Now we're over 4 million, as you say, population. And if you need to expand to 8 million, that is also in the charge for now. The south, and of course towards the desert, but that's also a little bit more to the south as well. Those are areas that are expanding. So my preference for an urban young professional would be still a classic marina, and maybe in the future the new marina, but it takes a few years. Waterfront, I agree. Something close, especially Europeans, they like to be close to the sea, or somewhere a bit more affordable, but then Dubai South. And then, for example, Al Fujairah, a few years ago was amazing, but already got actually quite in price increases. But those areas with good connection with metro, but you can also drive there in the future easily to the future Jebel Ali beaches, etc., etc. I think that in the long term will be a very interesting area, and then Marina will be more and more in the center. So yeah, I think that is also interesting.
You said it will, the center will basically move, and what I personally think is probably that people will just spread out, because we know the population is going to be growing hopefully in the next few years as well. Is that the financing hub like the IFC and the marina with all the commercial real estate around it, like JLT and Media City, the people will always try to stay close to these areas, but just find the best affordable area. The closest to their office, most likely. Let's say they would take the Mosaic building in JLT. If a lot of offices there, they want to be 15 minutes away with the car from that area, and they're just going to find the most affordable place, don't you think?
Yeah. No, by the way, I think also conceptually, I think that's interesting to note is that Dubai does an amazing task of creating a city of cities. And why so? If you look at the historic concept of development of European cities. Take Amsterdam, it's very easy. There's a lot of Dutch people also. They know the canals of Amsterdam. When Amsterdam expanded, every time there was a canal around it. And then the outside canal was cheap because you were in the outside. Then there was a new canal around it. And then the inside canal became much more expensive. That residual increase always, of course, came to the owners of the houses. They took a lot of residual ground price increases. Dubai has a much smarter development, also from an infrastructure perspective, but also of future ground residual price increases. They develop cities in the cities within cities, which are very interesting, even like high-rise cities, like JVC is a high-rise city. From JLT, my office, I see JVC as a high-rise city. In between, well, you have first Jumeirah Islands, which is very expensive, and then you have desert. And then you have, can you imagine how much that desert is worth now between JVC and GLT? In the old days of how European countries did it, that wasn't worth nothing. Now it becomes nothing, it becomes very high in price. So the residual ground value is already captured before there is a single development or being sold to an end user. So I think that is very smart, both in terms of developing quick, rapid developing of infrastructure to create infrastructure that you have city of cities. Also has its own challenges, of course, with for example, public transport, how to create that. But from a total city plan, I think is very smart. And imagine when you densify Dubai, there's a lot of areas between those cities still that can be densified and that can be developed.
I think you especially see that with the Blue Metal line. Because we are a bit in the time, Ian, can you just name one of your favorite areas in 2030 that if you would buy as an investment, where would you put your money if it's be delivered in 2030?
I agree with the guys. I think Dubai South is a prime area. From a personal perspective, I did purchase, my wife and myself purchased an off-plan property through EMA a few years ago. It was right out in the desert, in the valley. We've seen probably the increase of the value of the property almost reaching 50% within a 3-year period. And I do again agree with Jan in terms of that ripple effect, not just in Dubai, but that ripple effect, expanding into Ras Al Khaimah and the Emirates in between and up to Abu Dhabi as well. But in terms of perhaps for lower price point entry, maybe Arjan, Sports City, those type of areas.
I think Dubai South, it will be then.
Dubai South.
And guys, just because I want to only ask one question regarding the topic of infrastructure, and then I want to go to the case study, otherwise we will be sitting here tomorrow as well. For you, Safi, what is the most, let's say, which infrastructure development going on at the moment will have the most effect on the market? Will it be the Blue Metro line? Will it be the new bridge they are building on that side? Will it be the new airport? What development, infrastructure-wise, will have the most impact on the market? Choose just one.
See, if I would look at it in a short period of time, I would say Metro, the Blue Line Metro. But if I'm looking at the very big picture, it's going to be for sure the Maktoum Airport.
Okay.
Maktoum Airport is going to be a game changer for the city of Dubai, for the more specific Dubai South location. It's a very, very bitter truth, even if somebody does not like Dubai South or the master plan or whatsoever. The bitter truth is wherever the airport goes, the city shifts to that location. Or at least if you do not agree, because I don't agree the city will shift from downtown from Business Bay, from Deira. It will not shift. Those markets will stay, but it will have an expansion. A little bit shifters from the corporate companies going towards that side. So I would say definitely the airport on a bigger picture.
For you, Jan, which maybe us living here on this side of Dubai, some new roads from the RTA will help managing the traffic. Maybe the flying taxis, you never know what will be the most important one.
Yeah, well, but I definitely agree with the Maktoum Airport on the long term and also the Blue Line on the shorter, but definitely the airport. It means that, and Dubai, you see already from the Abu Dhabi side on that there's a lot of development in Al Jurf Gardens, then Al Gandout is being developed and continuously being developed. So what you see actually is that on Abu Dhabi, Dubai intensify. And the two most important airports in the UAE will be relatively short and connected also by public transport. So Maktoum Airport and the Abu Dhabi Airport and all that area, there will be a huge expansion. It will not be at the expense of the north, but the shift of the center of Dubai will definitely go to the south, partly as a result of the airport, big driven by the airport, but also by the fact that Abu Dhabi and Dubai are growing more and more towards each other. Then yeah, definitely we need other forms of transport, like short flights perhaps through the air, because we see that it is at the moment it's difficult to cope for the RTA with the huge number of increase. The cars increased at a higher rate last year than the number of people. That also tells you something of the population that came to Dubai, because there was 10% more cars are on the road, and any economy in the world that sees in 1 year 10% more cars on the road will get into difficulty. I think Dubai does an amazing thing on infrastructure, but that is just, those numbers are very difficult to cope with. So really we need more expansion on that, and hopefully yes, soon there will be also airways to be certified as a way to expand a strong demand. But we need also ground support, because the real numbers of hundreds of thousands of people should be in a metro type. That metro
so
is
the loop basically, or it's not going to be metro, it's going to be a roadway.
That would, and how much can that really do? So that is, so if you look, it is also interesting metric. If you look at for example a train in the Netherlands, in Europe, a train can do much less people per hour than a metro. A metro is built on numbers, on high numbers, high frequency, because of the speed it goes, because of the number of doors that opens. It's much more equipped to do that. And we really need an expansion of the metro system in Dubai. That will be very helpful.
Thank you. We're going to move to the last one, guys, because we're already running late now. It's going to be a case study. So for the people behind you can read it. I will read it out loud for you guys. So the case is quite simple. It looks to be difficult, but it's just a family living in JVT in a townhouse. They're renting at the moment, all right? But they're thinking of terminating the rental contract and get a mortgage and live into a bigger house. So the option they have is one, they either stay in the house, they stay renting, and they buy a small apartment as an investment with the savings that they have, or they terminate the contract, they look for a new place in an area that is nice for the kids, and they will get a mortgage. Now obviously there's a lot of personal things that are coming with this as well, personal opinions. I just want to know, let's keep it short because we only have 5 minutes left. What things can you give this person as an advice making his decision? So you don't have to decide for him, just maybe tell him what type of advice can you give him. Ian, I think this is one of the most common cases you get, I think. So
yeah, absolutely. I mean, look, from a personal perspective, I've always been more aligned to purchasing properties rather than continuing to rent, and that's the advice I would be giving to most people. I think in terms of making a first property purchase here by way of a mortgage, I think it's important for people to understand that the maximum loan to value, there are differences, but let's take a general cross-section of people that we would be purchasing properties below a 5 million purchase price, where the loan to value is 80%, and considering then that any subsequent property purchase by way of mortgage would be limited to 60% loan to value, and there's no way around that. So in terms of making a first property purchase, I will be advising that they utilize that 80% threshold to purchase a property for their own use, and then once they are comfortable with all of the monthly installments, the residual costs of insurances, life insurance, etc., and then looking perhaps to purchase another property for investment purposes.
Very interesting answer. Safi, what as a developer, what would you do in this situation?
I'm not going to speak as a developer here. Okay, I'm going to speak on, this is a realistic thing that has happened to me. I live with my family, by the way, in a villa.
Yeah.
It's a big villa. and we always wanted to own something. Mortgage was something, don't attack me, you know, but mortgage is something that did not make sense to buy such a huge amount of money, you know. If I want to go out in a market like this in the past 2 years from now, the villa prices are skyrocketed.
Yeah.
Okay, you own the land, that's a different thing, but to buy a villa of that size, it would be 10 million plus. And even if I could afford it, the houses we live in, it's big houses. I live in Mirdif.
7 brothers.
Okay, we're 7 siblings, and so it's a big house. So what we did is it did not make sense to us to go mortgage, and even if we had that kind of money, we would not pour it into a villa just to live in. So what we had done is we started to buy off-plan properties of small studios. And we bought this super early. This is a course of 2 to 3 years. We were patient, but we were all buying studios and 1-bedrooms and studios and 1-bedrooms. And right now, we own those apartments. We collect all the rentals, and it's paying for the rent that we stay in the house of the villa. And we have done a contract of 5 years. The guy cannot increase more than like 5% a year. So that's what I would do. Wait a little bit more, buy apartments of studios and a good rental property, take the rent and pay it off.
So you development as you advance.
So you own a house, you own studios as an investment that can pay out your rental of a big villa. If this guy has a big house and he cannot stay in a 2-bedroom or a 1-bedroom, which is our case, we would do something like this.
Amazing, thank you. Jan, a quick answer or quick advice for this person?
So I think this example is a perfect example that there are always exceptions to the rule considering your personal circumstances, because a big villa can sometimes be rented relatively affordable, especially if it's in a non-free zone, a non-freehold area, in leasehold area. Then typically those rental prices could be relatively affordable, but on average, my advice would be that the best investment, we know a lot of people buy here for others, as third party, but the best investment historically in all markets has been owning your own house. That is like in the long term, a worldwide. Why? Because you do not have occupancy risk at yourself, or rental risk, or any other type of risk, because you are landlord and tenant of yourself. So you know how to use it, you know when to use it. So with some exceptions, that is an exception. Or if you need flexibility because you don't know where you work in a year, if you're an expat and you are at the mercy of your employer, maybe deployed to another country. But if you are here in the UAE, mid-term to long-term, and have some form of stability, then typically, on average, I would say the most risk-averse way of an investment would be owning your own property. Because compared to rental yields that you would pay much less to a mortgage, but you need your own money for that. And even with the LTV rules, I would always try to get as much as money, at least 20%, but if you can 30% maybe, put that in, because also that equity investment is a good investment. And then own for the long term and use it as your own person. It is relatively easy here in the UAE. There's not a high taxation on owning property, or official taxation 0, but also the municipality fee is relatively moderate compared to other economies. So it is a relatively affordable way of long-term living. So my advice to them, in 90% of the cases, but there's always the 10%. 90% of the cases would 200,000 dirham. Okay, that's like 50,000 euros, right? Every year. That's a lot of money for a townhouse.
I think a lot of tenants are in the back of the head now.
200,000. That's a lot of every year. Like, look at what that can yield if you are there for the long term. So typically, owning, if you have the midterm or to long term stability, and you can afford it, owning.
Very clear answer. Thank you, guys.
If you ever want a job with us, Jan, just let me know.
I just want to have a few questions from the audience, and then we will round it up. Is there any topic we haven't touched base on, or any specific question you had in mind from the beginning? Just raise your hand if any questions. Okay, so because
I have a question.
Please.
That hasn't been addressed. So my wife is American, and taxes are now chasing people here in Dubai. What are the big changes you can see for people who are thinking, okay, so Dubai is a tax-free haven or the UAE is a tax-free haven, how soon do you think it's going to start to take effect? And maybe even, so you're British, I'm British, you know, a lot of Brits are coming here. Is there a window you think that Dubai and the UAE has before which tax will become an issue?
We have already seen a couple of tax regulations coming up in the last few years, right? The corporate tax at 9%. I have heard that probably the DLD charges buying a property will go from 4 to 6%. So there will be a different, definitely some increases in tax because they have to do it also to stay transparent to other continents like the European Union, for example. They cannot be completely tax-free. Maybe Jan or Ian can add something on this as well.
Well, first of all, US, together with Eritrea, by the way, is the exception in the world of taxing on citizenship. The US, for 30 years, they tried to get rid of that because it's not compliant to typical thoughts of taxing where you have permanent residency. But it proved to be politically extremely difficult in both climates, populistic as well, to get rid of a rule that doesn't affect your own residence at that time. But it is not compliant to what is considered to be best practices. So other countries, other nations do not tax on citizenship, and I also do not see them doing that because it's extremely. I've been responsible for the Dutch tax administration for many years, and it is a nightmare for tax administrations to really be able to administer and collect also that, and also for the American tax system. They do that because the Americans still think they have the strongest passport in the world, which is not the case. Absolutely not. There's been much stronger passports nowadays than the US passport. But
the UAE passport.
The UAE passport is stronger, Singapore passport, but actually any of the 27 EU passports, every single one of them is stronger even than the US. So US now is still on paper somewhere in the 50s or so, or 38 or something, but it's still, if you are comparing it to really, if you take it, the tax into situation, some people rank it even much lower than that, some organizations. So, but still, the US is strong, has their tentacles around the world, so they feel that they can do that. I would not definitely advise any Minister of Finance in the world in trying to take that example. Although, you do see, of course, also from populistic reasons, and I can imagine, and that from a populistic point of view, that there are also many European countries are considering taxing wealthy people perhaps on their exit. So you will see potentially you will see a stronger call in some countries, people moving to another location on that. Even maybe following a few years after they exit their tax return still for a number of years, not based on their passport at that, but based on their exit. I would not be in favor of that. I think it's also very complex, and I think you should be taxed where you live, and not on a random where your passport is from. And again, a European passport, albeit is stronger than the US, people can take another European passport if they would want, or another passport. So, but I do see that there is a political stream in some countries, in Western Europe, for example, that do call for an exit tax. But we also have seen that implementations of that, look at the UK example, typically even enforce the migration demand, because people then are afraid, what if you can change that, but what can you do next, what can you do? So you're maybe even more pushing out your people than that. And so I would say just accept the fact of life that you're taxed where you live, and then see that you have strong rules, that you are not faking it. Because, for example, that's my heart of ex-Minister of Finance, I still feel I still sometimes hear of Dutch people here living resident, but then say, I can still be 6 months per year in the Netherlands, and then a few months in in Spain, and then but officially I'm resident here. No, that shouldn't be able to work.
I think it's
you should be really living here, have your social life here, and being a resident here, and in that case you should be taxed here.
I think it's a topic where we can talk about for an whole other panel, the tax regulations. So definitely, and generally, guys, the topics that we have missed, unfortunately, but we're already 30 minutes over time. I want to thank each one of you very, very much for taking part. It's for me, I'm the guy learning the most here. I think the information you guys share with me, I can share with my investors as well. So thank you very much, Jan, Ian, and Safi. Also, audience, thank you for all the questions, and please give them applause, guys. Thank you very much.
And thank you
Yeah, of course.
Thank you. It's great.
So guys, if you want to catch up with one of our panelists, the contact details are on the board. If you want to contact details of Jan, let's get started. Thank you very much, guys. Ik heb jou, ik dacht, iemand is niet op het bord.
Nee,
dat kun je bereiken. Ik denk,
kun je altijd via
iemand aan de rechterkant van het bord zetten.
Ja. Leuk. Send me a message.
Heel interessant. Jouw antwoord was dat ik wilde horen.